Welcome back to the Digital Asset Report. Bitcoin is trading under $63,000. Ethereum is around $1,870. Softer U.S. inflation has helped calm the macro picture, but it has not produced a major crypto breakout. Bitcoin ETF flows also remain mixed, with about $61 million leaving U.S. spot funds on Wednesday. The biggest story this week is Standard Chartered moving regulated stablecoins into live use in Hong Kong. Anchorpoint Financial, its joint venture with Animoca Brands and Hong Kong Telecommunications, began rolling out HKD at par on August 12th. The Hong Kong dollar-backed stablecoin is initially available to institutional distributors and professional investors. Those firms can convert between the token and traditional currency, while businesses can integrate it into payments and settlement. Retail access could follow by the end of the year. This matters because Hong Kong has moved from writing stablecoin rules to putting regulated digital money into circulation. Standard Chartered already has banking relationships, payment infrastructure, and corporate distribution. Now those networks connect directly to a licensed blockchain-based Hong Kong dollar. And over in Washington, the Clarity Act has been pushed into September after the Senate left for their August recess without a final vote. The bill would create a broader federal framework for digital assets, but lawmakers remain divided over stablecoin rewards, ethic rules, anti-money laundering requirements, and competition with bank deposits. With the midterm elections approaching, the legislative window is getting tighter as the focus shifts to what the next Congress may look like. SEC Chair Paul Atkins expressed optimism in the eventual passage of the Clarity Act. Take a listen.
I'm optimistic that Congress will pass the Clarity Act. And we're doing all we can to help them answer their questions and provide technical assistance. But ultimately, statute is the way to future-proof something. We are ready, willing, and able to come out with rules that address the same issues in Clarity and other aspects of the crypto market. And I think that it behooves us to do that, either to implement the Clarity Act, or if something should not happen in Congress, then we stand ready to provide that. But ultimately, we need the certainty of a statute that will help future-proof so that we have clear direction and to go for.
Meanwhile, Franklin Templeton received no action relief from the SEC that allows its registered funds to use the Franklin on-chain U.S. government money fund for cash management and securities lending collateral. Ownership records can be maintained through Franklin's blockchain-based Benji system. It's another step towards putting tokenized assets inside the daily operations of traditional investment funds. And Japan is moving in the same direction. Mitsubishi UFJ Financial Group announced a proof of concept for Japanese government bond repo transactions using the Canton network. Traditional settlement can take 1 to 3 days. MUFG wants to test near real-time settlement, bringing blockchain technology into one of the most important collateral markets in global finance. And Bitcoin miners are also finding new ways to monetize the infrastructure they built during the last cycle. Riot Platforms signed a $9.1 billion 20-year computing agreement with Anthropic. Riot will provide 191 megawatts of computing capacity from its Texas campus. Goldman Sachs is making a major move into crypto. The bank agreed to buy ETF manager NEOS for $2.25 billion, picking up a ready-made Bitcoin fund worth $1 billion in the deal. It's another sign that Wall Street firms are choosing to acquire existing crypto products rather than build them from scratch. Goldman now joins a growing list of major banks putting real money behind digital asset strategies. Finally, there is yet another security reminder for crypto holders. Nearly 14,000 Trezor customers had personal information exposed through a breach at shipping provider Shipmonk, which told Trezor on August 10th that an unauthorized party had accessed its order data systems. Of those affected, 11,742 customers had their full name, email, phone number, and shipping address exposed, while another 1,947 had their name, city, and email exposed. Trezor says its own systems and hardware wallet remains secure, but it's warning customers to expect more convincing phishing attempts now that attackers have real names tied to real addresses and confirmed wallet ownership. The company is building an anonymous delivery option with neutral packaging and generic sender details planned for the EU in September and the US by the end of the year. Coming so soon after the cold card exploit, this news has many users reconsidering their cold storage options and rethinking how to secure their savings in the future. Prices remain stuck in a tight range, but the infrastructure is moving. Regulated stablecoins are going live, tokenized funds are entering cash and collateral management, major banks are testing blockchain settlement, and institutional custody is expanding. The market may be quiet, but adoption is continuing underneath it. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.